You need a high salary, over 100K, to get into the market, and you need a truckload of savings.
As a first home buyer, I think the biggest question is, what can you do today?
I think the first thing is work out what grants are suitable for you.
One of the key stats pulled out by REA is that we're at a shortage of 2 million homes. Do you see a solution to that?
Macro level solution would be My name's Adam Shah, and I founded Locale Property Group to help fix what's wrong with the housing industry after working at some of the biggest building groups. We started this podcast to share insights, real stories, help clients navigate the industry with real confidence. So today we've got Lori Pirozzi joining us. Lori is the co-founder of a skin brand, Glow Culture. She's an unenthusiastic dance mum. That's your words. Loves paddle boarding and beach days, is a self-care queen, works at Locale Homes, a new home advocate, and absolutely killing it. Your clients love you. You help first-time buyers get into the market. And today we're cracking the property ladder with grants in 2026. So welcome.
Thanks so much, Adam. Great to be here.
So our first segment is Where's the Lie? There's going to be 2 truths and 1 lie, and my job is to try to unpack that. So I'm going to throw it over to you.
Okay, here we go. So I've got 3 questions for you. I'm going to rattle them all off. Some buyers have been forced to repay grants due to simple paperwork errors. Number 2, just over 20% of my clients are strong, independent women building by themselves. And number 3, once I had to stop presenting at a conference because someone died in the audience mid-presentation.
3. Last one.
Is a lie?
Yes.
Oh, geez, how did you get that so fast?
Oh, the other 2 were correct. Yes, 100%. You do have to pay a grant back if you don't follow the rules, essentially. And look, I've been guilty of that. I had a family tragedy and got the first home buyer's grant, couldn't live in the home, and had to pay it back. So I've experienced that. I see you sitting with a lot of your incredible customers, and generally our business has over 50% females, and we attract a lot of female buyers. So that seems pretty true as well. So I'm like, all right. Sounds like a death in the audience.
Well, so that one was you're right, is correct, but it wasn't entirely untrue.
Okay.
So I was presenting at a conference one year, and there was about 400 people in the audience across suppliers and retail owners, and someone had a medical episode right in front of me in the audience where we had to stop the presentation. Thankfully, they were okay though.
Good, yeah.
But obviously something that you don't ever wish to experience as a presenter. So
talk about an icebreaker, 400 people, that sort of probably loosened the room up a bit.
Yeah, well, everyone was kind of, and it was right at the crux of like just finding my groove.
You're getting the point to the pointy and all the good stuff.
And then had to restart again, but thankfully they're okay. Yes.
But like I said, very glad that they're okay. So next segment, it's building without the bullshit. Is 2026 a good year to be building your first home or building a home in general? And we've got some articles here that we'd like to talk through, one from realestate.com, one from HIA, which sort of explain the market and obviously good discussion points for us.
Yeah, and obviously, Adam, there's so much happening in the market right now and the outlooks are quite positive. But what are we seeing from, obviously, the government's got goals as well to meet these particular housing benchmarks.
Yep.
What does the industry look like as it stands?
The industry, realistically, is pretty overheated. That we've got stimuluses through deposit schemes, grants, low interest rates we had a few rate cuts recently, and it's very, very hot, specifically in Western Australia. And we also have a constrained pipeline. So constrained pipeline meaning the developers just can't develop enough land. They can't procure enough land, and they also can't develop it fast enough, which means, getting it through civil contractors, through relevant approvals. So that's constrained. And builders are also constrained as well. There's only a certain amount of labour that they have to be able to build homes. So that's putting a whole lot of pressure.
Yeah.
There's more buyers than there are established properties available, and there's more buyers than the industry can really develop and produce. So that's creating obviously this huge uptick and, driving a lot of price growth in Western Australia. So yeah, it's really, really crazy. In the short term, all these stimuluses, are they going to create more houses? maybe over a long term. Yes, of course they are, but they're not fixing the problem today. Fundamentally, if someone wants to go buy a house today and they're building homes, it's still going to be 2 to 3 years until we start to see those pressures ease. So, we've got some pressures, but I do see the 2026 market being hot. It's going to continue to be hot. I do potentially anticipate there will be a rate increase just to try to slow down some of the demand because, the pressure is really there.
Yeah, because that's interesting. The HIA is saying in this article that the momentum, the rate at which we'll pick up will be determined by the pace at which interest rates drop. And obviously what you've described is the complete opposite to that.
Absolutely.
So is it interest rates going to solve the problem? Is it supply? At what point do you think we're going to actually catch up where all of those factors and all those barriers align to that kind of trajectory of solid growth?
100%. There's a bit of a chicken and egg, right? Because you need migration to get more people to be able to build the homes because we've got fundamentally a labour shortage across all parts of the business. Our business has shortages across everywhere in every discipline, but specifically trades is a huge undersupply.
Because that's a big one, right? Everyone's talking about migration and the impact it's having on prices.
Yep.
But we need that for labour.
Correct. So it's a bit of a vicious cycle, essentially. It's a situation we need to trade ourselves out of as an industry and as a state. We do need more people, and there's a positive migration from interstate, but also internationally wanting to move to Western Australia because it provides incredible lifestyle, job opportunities. So we need to create more housing. So more housing means obviously trying to stimulate more housing through incentives, which the government's doing. The HIA and NBA do an incredible job championing, deregulation and trying to get houses through the process as quick as possible. But again, we're constrained on what the reality is on what we can actually build as an industry. So really interesting times. We are seeing it every single year. It's improving. Build times, whilst we're developing more homes every year, build times are sort of decreasing, which is a sign that there is more labour. And we've come back to really quite realistic timeframes in the Western Australia market. Through COVID, they blew out up to 2 years to build a home. We're seeing most homes built within 10 months quite comfortably or below these days. So that's positive signs. So the market is improving from a supply point of view, but there's still going to be a whole lot of heat in the market and we will see property prices increase this year.
Yeah. And what that really means for first home buyers is don't wait for that interest rate cut because A, it's probably not going to come.
No.
And B, if you do wait, you're just going to price yourself out of the market again.
Absolutely. Look, I'm a mortgage holder and I would love an interest rate cut, but in reality, an interest rate cut is not what we need. We should at least stay flat because there's too much demand, there's too much inflation, there's too much craziness in the market right now. So stability is what we need because when you overcook something, there's a deficit on the other side. So I do anticipate there will be probably some rate increases this year, which is tough for first home buyers. But that also highlights they should probably get into the market right now because their borrowing capacity is going to decrease if they have an interest rate rise. And also property prices are increasing. So with a interest rate increase, their borrowing capacity drops and the property prices are going up. They're just it's making it harder and less achievable. So yeah, the time is now.
Yeah. One of the key stats pulled out by REA is that we're at a shortage of 2 million homes.
Yep.
So what does that mean?
We just can't get enough homes on the ground to keep up with the demand. So what's causing that? Obviously, we've got stimulation in the market through rate cuts and incentives, which is driving further demand. We have migration moving into Australia, Western Australia specifically, from interstate and international, because it's a great place to live. And we also just need more people to actually build homes and fill jobs. We've got a constrained land pipeline. We can't develop enough land. The developers can't procure enough land. They can't develop enough land. They've got constraints with civil contractors, getting things through approvals and getting them to site. We also have a really constrained builders pipeline. So the builders pipeline, specifically in Western Australia, was really, really, low. The capability was really low post or pre-COVID. And then obviously we had the stimulus and we slowly have seen the builders pipeline, or we've slowly seen the builders capability increase over the last few years. based on them just building up trades and suppliers. And we are seeing every year an improvement in approvals, but it's still not keeping up with demand. So essentially that's creating a deficit of housing, which is putting pressure on prices. And, that's why we're seeing these crazy situations where people are camping out for blocks of land. And there's hundreds of people sort of putting in applications for 5 blocks of land. So it's a really, really crazy time.
Yeah. And with those approvals, we're seeing WA lead the way with that. But typically we are the most undersupplied state, followed shortly by Queensland and South Australia. So we're in kind of a little bit of a more heated market than the rest of the states, would you say?
We are, yeah. Look, West Australia and Queensland, to be fair, is hot, and there's a whole lot of demand. Obviously, we've come from a very affordable median house price. That's now, up there with comparable with a lot of other states. So we're no longer the most affordable, but we're an incredible place to live. We're an absolute engine room, so people are moving here internationally and from interstate, and people are just wanting to get into the market. Yep. And like I said, the WA pipeline is quite constrained from a land supply and a builder supply point of view, so it's creating that upward pressure.
So, Adam, you mentioned something really relevant there earlier around land shortages. Yep. Obviously, that's something I experience personally every single day with my clients. The process has changed even from the last 6 months, the amount of land that's available. I mean, we're seeing totally different processes where we've got bidding.
Yep.
Places like Treeby, Bentley and Hammy Hill are bidding $50,000 to $80,000 over the starting price. The prices have just gone through the roof. Do you see a short-term solution to that?
So short-term, it's hard to have a short-term solution really with land because it takes time to get it out of the ground. But from a state government level, probably deregulating and getting things through approval faster would be really, really great for developers. Obviously, there's a lot of red tape and things take often years to get them rezoned and bring them to the market as a rezoned development site.
And why is that? Sorry, Adam, why does it take so long?
Often it's not rezoned appropriately. So often it could be zoned rural and it needs to be rezoned into urban development, and that can take time. So it needs to go through a lot of town planning, and there could be requirements that are needed. And I understand it's not necessarily a tick and flick from a government point of view, but that does slow things down. There is just not enough parcels of land available for the developers to procure. I know every single major developer right now is looking for land. I was speaking to one only a couple of days ago that they were sitting across a table for 4 months with this land seller. They were almost ready to get this deal over the line after many, many months of negotiations. And then someone came in over the top and bidded $5 million more, basically killed the deal. And this developer's like, well, we actually can't make it stack or get a return on this piece of land at our price. So they've had to walk away from it. And then they're starting again. So they're spending countless days and hours and years trying to procure land and not being able to find any. So the same thing that our buyers are dealing with, the developers are dealing with, and the farmers or whoever are selling the land, they're going to try to maximize their sale price, and then that gets passed on to the end user, which is the buyer. Additionally, civil pressures, that's going up, the costs are going up, labor costs are going up in their businesses, the developers' businesses, so all that gets passed on to the end user. So answer your question, there isn't really a solution at any point in time right now. It just is what it is.
Yeah. So eventually supply and demand have to meet in the middle for this to kind of be a success.
So that's where the government, obviously they've stimulated the market. It's quite hot right now. There may be a point where they use the interest rate stick and, try to slow down the heat in the market, which I do anticipate will happen this year. But there's still the fundamentals are there that we've got a whole lot of migration coming in. There's still people that are going to want to live here because of their lifestyle and the job opportunities. And there's not enough houses. So I don't see it slowing down anytime soon. Additionally, over the last few months, we've seen campouts. We've seen the ballots just melting down, essentially. Often developers are releasing 5 to 10 blocks at a time, and often there's hundreds of people going for those lots. So every release, people are missing out, and that's creating a compounding effect because then those people go to the next release, and then there's new buyers jumping in that line. So the line's kind of increasing every single month. I think a little bit of a silver lining is there. A lot of the developers kind of shut down over the Christmas break, and post-Christmas break, we'll start to see them obviously wanting to release more land as fast as they physically can because it obviously helps their cash flows, and we will see blocks starting to ease. It's definitely not going to be like it was 12 to 18 months ago. They're still going to be very tight. But at the moment, it's just this really, really crazy pinch point. I assume it will ease that time.
So we will get through it, which is a positive sign.
Yep.
So one of the stats in the REA article, Adam, indicated that housing approvals we need to be approving 20,000 a month, and currently we're sitting at 14,000, but that is on the way up, right?
That is, yeah. So 20,000 nationally is what we need per month, which is a pretty big number. 14,000 currently, like you said, increasing. So there is a silver lining. It's improving, but we've still got a way to go.
Circling back to the HIA article, Adam, we talked about interest rate increases on one hand and interest rates decrease on the other hand to try and stimulate the market. What do interest rates actually do to borrowing capacity?
So, yeah, really rudimentary terms, a 0.25% rate cut is $15,000 on someone's borrowing capacity. So essentially it just brings more money into buyers' pockets. Often that then brings more people into the market, and that can then stimulate a market. Often that's why they do interest rate cuts, to stimulate markets. So we've had 3 consecutive, which essentially put 45 grand into people's pockets from a borrowing power point of view, and that's fueled demand. The HIA is saying that we need rate cuts to stimulate more housing approvals. We're pretty down stimulated right now.
And demand's not the issue, right?
No, it's the constrained pipelines which is holding things back, land and getting the homes built. So there's plenty of demand there. There's literally a line of people wanting a home. It's the constrained pipeline. I get what they're saying long term. You're having a competitive interest rate always keeps the housing market on, and that then creates more supply. Looking back, 10 years ago, we just completely created a deficit. We weren't building enough homes. West Australia specifically, we went through a really tough time post sort of 2015 to 2020. We had a really big deficit in housing supply, and that has now created the pain that we're experiencing today. So I get what they're saying. They probably should have stimulated the market more then and kept the housing supply stimulated, and then we wouldn't have this huge deficit right now. So essentially it's the whole peaks and troughs that we need to kind of manage and make it more linear.
Yeah, makes sense. So people are waiting for a rate cut, Adam. Should we be waiting?
No, because the 15 grand that you may pick up from a serviceability point of view is not necessarily money in your pocket. You're losing month on month with land prices going up and build prices going up. So waiting is just costing you money. And you're going to be waiting a while, I think, for a rate cut. I don't anticipate a rate cut really this year, just with how hot the market is. Look, I'm not an economist and I could be wrong, but all sentiments are kind of looking towards there may be a rate increase. Circling back to the approvals that we were speaking about, for Western Australia specifically, we've got such a constrained pipeline. Obviously, we're talking about land. That's very much constrained. But builders can only build so many homes. They've all got capability, capacity. And putting too many builds in at once is just going to create a disaster. We saw some, pretty serious pressures that happened through COVID. So builders need more labour. They need more supply. We're seeing upward pressure on trade prices, and that's just based on demand. So we do need more people moving to Western Australia from interstate and internationally to be able to build these homes. But then that's our chicken and egg thing. We need more people to move here to build the homes, but we need more homes for them to live in. So there's pretty extreme measures happening. I know some building companies are now providing temporary accommodation and buying essentially big commercial properties and decking them out as housing facilities for people to live in while they're seeking homes in Perth, because there isn't any homes available, and they can get to work and build homes. So that's what the state's gotten to. It's pretty extreme.
So realistically, supply just needs to kind of marry up with that demand before we can see a way forward.
Absolutely. And it's that whole chicken and egg. We need people here to build. We need houses. So it's just a really, incremental wriggling piece that we have until we eventually get it right.
Do you see a timeline on that?
Look, I do anticipate probably next year we'll start to see things ease a little bit. Obviously, we've got some really heavy wind in the sails right now. I anticipate there will be probably some rate increases, which may try cool things a little bit. But cooling things is not a bad thing, in my opinion. It's good. We all want a market that's, safe, linear, going in the right direction and still increasing, but increasing in a realistic, safe manner. When you overstimulate a market, you just create a lot of pressure on the pipeline, drive up prices, inflationary prices. So yeah, we want things to cool down a little bit, realistically, so then people can get into a home and we don't create, knock-on effects for the future.
And obviously we're seeing those high prices, and that leads into what we manage daily around buyer expectations.
Absolutely.
So how do you get into the market with these increasing prices? And it really is, I speak to my clients a lot about that, around do you take the opportunity to put in aircon in later, or do you do flooring later and just get into the market and get in at these prices at what you can afford.
Absolutely. I think there's a little bit of like bruised ego as well. I know I've experienced that where you don't want to get in because you're like, oh, I'm now paying $50,000 to $100,000 more than what it was. And you're like, should I really be buying? But that goes away pretty quickly because we're seeing people buy and then in 2 months, their block price has gone up $20,000, $30,000, $40,000, $50,000 and like, okay, wow, that was the right decision. So managing expectations is key. Getting into the market is key. Compromising, back in the old days, like my family, when they moved into their house, no flooring, they walked on the concrete slab for 12 months. They had newspaper in the windows. I'm not suggesting people do that, but that's just sometimes a compromise we need to consider to get into the market, because the key is get into the market because your life gets a lot easier once you have a property. You build some equity in that property and you can then use that property to create freedom, however that looks, whether you buy an investment property or upsize, whichever path you decide to take. But the key part is just get in as soon as you physically can.
Yeah.
Look, that's a great segue for us to talk about the grants that are available, because 2026 is going to be a good year for first-time buyers to get into the market. So let's run through what's available currently. First off, the first-time buyers grant.
Yeah. So the first-time owners grant is probably the one that most people are familiar with. It has been around for a long time. It acts as a boost, as a one-off payment for people getting into their first homes, regardless whether it's established or a new build. The amount varies by state. Currently here in Western Australia, it's $10,000, and in Queensland, it's $30,000. And it acts as a great boost to help you get into the market, no doubt about that. From my perspective, there are some limitations as we look at this grant. That $10,000 has been around for a while, so it really hasn't changed to catch up with increasing prices. But also that the cap and the purchase value cap of $750,000, albeit that's changed relatively recently. I think it probably needs to change again, and there needs to be a different way of looking at that.
Agreed. I personally think it needs to be pegged potentially with a median house price, reviewed quarterly. What we see is huge drawn out points of time where it's not relevant, and then they rapidly increase the cap amount. So I think, that does need to be indexed or pegged to the median house price. That would certainly help buyers get in. So the next one is the First Home Super Saver Scheme, which is a bit of a tongue twister. But that one is, you can essentially contribute $15,000 a year of your income into your super, and you can have a total amount of $50,000. That'll only be taxed at the 15% for super contributions. You can't use the super that your employer's already tipped in. It's the super that you're putting over and above. So essentially, it's like a savings account, and it's taxed at a lower rate, which is really cool. Instead of getting taxed at your normal tax rate based on whatever your income is, it's a lower amount. So essentially, it's giving you a bit of a leg up to be able to save more money quicker. And you can release those funds and then purchase a property, whether it's an established property or a house and land package.
Oh, that's amazing.
Another one I love is Keystart, which is a government-backed lender. So they've been around for decades and done an incredible job and got a lot of Aussies into home ownership. What they do really well is have a 2% deposit, which is a lot lower than most lenders. They have no lender's mortgage insurance, which could save you anywhere from $20,000 to $30,000 on your property. You can pay a minimum amount during construction. So they have a $400 a month minimum payment amount. So that means you can rent a property, but you can also build a property, and you're not sort of drowning in repayments from a build point of view and trying to rent a property. So
I love that.
It's really great.
I love that. And a lot of our clients are using Keystart more and more.
For sure.
That is such a big leg up for them and relieves so much stress for them during construction.
Absolutely. I think it's close to about 12% of our clients are now using Keystart. We saw that drop right back when their caps were low. Previously, their caps were $730. They've recently increased them to $800K, which is great. So it's sort of in the market right now. And they also increased their income caps. So the income caps have been increased to $148,000 for a single, and it's $218,000 for a couple, which is really great. Additionally, we've seen Keystart sort of flex on those caps. They've been very generous in allowing people with slightly higher income and creep over the purchase price cap a little bit, because they just genuinely want to see West Aussies into a home. And they know that the market's moving really quickly. So they've been really, really flexible and supportive. Another real benefit is people that may have had, some troubles in the past financially. If you've got a bit of bad credit, or you've ever been bankrupt for, some time ago in times past, they'll actually let you get a home loan as well. So very supportive of the West Aussie community.
Yeah, and it is showing in the uptake on clients using Keystart.
Absolutely.
So I'm going to talk about the 5% deposit scheme that came out October 2025. And this helps first home buyers get into the market with just 5% versus the 20% that was originally in place for anything over $750,000. Obviously, single parents get in at a little bit cheaper at 2%, which is in line with the Key Start, without paying any LMI. The only real question mark I have over this, probably more long-term because it stacks up now, is that $850,000 purchase value cap. It certainly works on today's prices, but as we move forward in this heated market, I do wonder where this needs to be reassessed to.
Absolutely. Another one is Help to Buy, which used to be called like a shared equity scheme, which is essentially the government going in as a co-applicant on the property. So they will go up to 40% of the purchase price on a new build. So they'll own 40% of the property, but essentially help with 40% of the funding, which is really, really cool. So
They own 40% of the rooms?
Yes, put some state workers in there. No, you completely inhabit the property yourself. It's your property. Essentially, they're just a co-applicant from a funding point of view, and you do have the ability to buy them out at a period of time, and you also can pay down the portion over a period of time as well. So when you decide to buy that out at that point in time, they will use an independent valuation company, which will value the property, and then you have to essentially buy out that 40% at the market rate. So
do you have to buy them out?
No, you can continue on and, absolutely just live on because essentially the whole thing is affordability. So some people might not be able to afford the additional 40%, so you can just continue on as normal. As an example, so on an $800,000 purchase, the buyer would approximately have to come up with about 16 grand. So the remaining loan would be about $544,000 for the person that's purchasing the property. And the government contribution would be $240,000. So that makes up that total $800,000 package price. So it's a fair chunk that the government's contributing. It's a huge leg up for people to get into the market. And how we're seeing property prices move so quickly. Yes, whilst the government might own 40% of the property, a bit of something's better than a lot of nothing. So, only 60% of property in this market is bloody good.
Yeah. I always say, would you like 100% of an orange or 50% of a watermelon?
For sure.
So, Adam, with these schemes, we've talked a lot about the schemes. Can some of them be stacked? Can we use multiple ones at one time?
You can, but it all depends on your eligibility criteria. But Key Start and the first home buyers grant can be used together. So you're getting the saving of lender's mortgage insurance, which could be $20,000 to $30,000. Plus you're getting the first home buyers grant, and you're also getting stamp duty concessions as well, which could be anywhere from $15,000 to $20,000. So there are a lot of benefits that are stacked. So the government is really doing their best to stimulate the market, but also help first home buyers get into the market. This one is where we get rapid fire questions, throwing them at me this time, and we have to answer them. So throw them at me.
Here we go. Now, these are mainly from our socials and feedback from our clients. So are the government grants just adding more fuel to an already undersupplied market?
Yes, they are 100%, but they are also helping people get into the market that couldn't. That's why it's being fueled. A lot of these people probably didn't have the opportunity to get into the market. They couldn't have saved the money. They didn't have the deposit. There's too many associated costs for lenders, mortgage insurance, etc. We've just spoken about that. So yes, it's fueling the market, but it's fueling it because, first home buyers now have the capability to get in.
Number 2, is migration just adding more demand to the market and pushing prices up?
Yes, it's pushing the prices up. Yes, it's creating more demand in the market, but it is essential. We need people to fill the jobs that WA has. We need more people to build homes. We need more people to develop land. We need more people in the resources industry. So it's kind of chicken and egg, but we need more people in West Australia because we're a booming, growing state. But yeah, the housing supply is a challenge. So yeah, we just got to manage that.
All right, Adam, final one. What's the catch? Isn't there always a catch to these government grants?
The catch is they're trying to build more homes. Look, we just spoke about that. There's not enough houses getting built, so we need to build more homes. That's why they're throwing it out there to stimulate the market. But the end user, the buyer, they're winning. They're picking up grants. They're getting funding to be able to get in a home, and they're getting capital growth. So it's a win-win. Now, it's my turn. I'm going to ask you some, Lori. Isn't the 5% deposit scheme just making the banks richer?
Look, essentially banks are always going to win because the more lending that goes on, that's their business, undoubtedly. So yes, they will win long term. I think there's an important note here in that the banks aren't actually getting the LMI. The government will be paying that to the insurance companies. So again, like you said before, everyone's winning. The banks are winning, The government's winning because they're able to build more houses, and first home buyers are winning because time is on their side to get into the market.
Is there so much paperwork? Is it even worth the headache with these grants?
Oh, paperwork's always a headache, right? But there's paperwork, sure. But that's what the brokers are there, the settlement agents and people like ourselves are there to do. So we're here to guide you the way through. Is the paperwork worth it? Absolutely. You're getting a home. So I think, you've got to pick your pain there.
You need a high salary, over 100K, to get into the market, and you need a truckload of savings.
So, look, I think there's two parts to that question. As a single, yeah, absolutely, you need over 100, but as a couple, not necessarily. Don't need a truckload of money. Obviously, we've spoken a lot about the grants that are available to help reduce that. And between Key Start, the 5% deposit, it's not necessarily the biggest barrier. You just need to understand your position, and that comes with a conversation.
Our next segment is Bring It to the Table, where our guest, Lori, brings something special that you'd love to talk about.
Okay, Adam, I'm going to do this for the people. So I brought my sleeves from my last post to the table today because I think it's worthy of a discussion.
Love it. Talk me through it.
So the Facebook community clearly thought that my sleeves were a hotter topic than the First Home Buyer's Guide, which was a valuable piece of information. So I'm going to throw it out there because my outfit divided our client base.
And I can understand that as a bloke that wears a black T-shirt every day. The sleeves serve no purpose, but I'm sure they're very fashion forward.
That they are. And I just wish it'd gone viral like that whole 6-7 thing, because then we could have been on a totally different planet, really. But what I loved, and there were obviously some big lovers, and thank you. I love the fact that something that's 10 years old and almost vintage has come back to life, as all fashion does. But there were also some haters. One hater, I absolutely loved his comments. John, I'm calling you out, and I'm going to read this because this is probably the thing that gave me most satisfaction. So John wrote an entire paragraph explaining that being offended by a piece of fabric isn't a real thing. It has no purpose and shouldn't be respected as a phrase. Now, I'm not quite sure where he was going with that.
Yeah, it sounds like John had a few shardies when he wrote that. It might have been later on in the night, but good on him. He's passionate. And I encourage John and all the others to keep doing whatever they do and comment on your sleeves because it's helping us get our brand out there. So thanks for helping the algorithm, John, and thanks for the interesting comment.
But seriously, for clarity, my sleeves were not offended by any comments, and I will continue to keep this fashion item in my wardrobe.
Nice.
For later use. And if you do want to actually revisit that post, please take the time to download the First Home Buyer's Guide because it's actually a very valuable tool.
Absolutely. No feelings and no sleeves were hurt in this segment.
No.
So our last segment, Lock It Up. This is where we summarise what we've discussed and also give actionable items for our listeners. So, Lori, where do we start?
So I think the biggest question is, should we buy in 2026?
Absolutely. The market's still moving. It's hot. And yeah, we don't anticipate it slowing down based on how many buyers there are. So, yes, you should be buying.
As a first home buyer, Adam, what can you do today?
I think the first thing is work out what grants are suitable for you. Obviously, we discussed that, but there's a lot of products in the market that will help you. I think the biggest barrier for most people is just finding out where they stand. So just start exploring, chat to people. So you can speak to a finance broker. They can sort of give you an understanding of what you're eligible for and what you can borrow. Another one is download our First Home Buyer's Guide, the one that we're talking about with the controversial sleeves. That will provide you a whole lot of information, and it's a really good starting point for people to get their head around where they need to be. Speak to an advocate like yourself. We're all here to help. We all love what we do, and we genuinely want to see clients into home ownership. And if you're not ready now, we'll at least give you a bit of a path on how to get there in a short period of time. And I think that the key is action. Like literally just you make a decision in your head mentally and go, I'm going to make this happen. We've seen people in really challenging situations and circumstances, and we've worked with them for months to get them to where they need to be to achieve home ownership. So if you check out our Google reviews, you'll see hundreds of those people. We're there to help people.
100%.
So thank you, Lori. Really enjoyed our chat today, and thanks for sharing your insights.
Thanks, Adam.
Thank you for listening to Own It, your property partner. If you found today's chat helpful, share it with a mate, subscribe, and leave us a review. Today we're recording on the land of the Whadjuk Noongar people. See you next time.